Welcome to Business with Beers. I'm your host, Brian Beers. This is a podcast for entrepreneurs who want to learn how to build and manage their wealth like they manage their business. My goal with every episode is to inspire you through the stories of my guests. This week, I've got an amazing show with Jay Bourgana. Jay is a recovering management consultant turned business owner. He has experience in banking, consulting, and manufacturing in China and Europe. Jay and I have a great conversation about thinking big and putting together systems and processes to really leverage your time. If you enjoy this episode, please share it with your friends, rate and review with your favorite part to help us reach more people. And if you'd like to learn more about the topics covered in this podcast, check out brianbeers.com to sign up for my free newsletter delivering content directly to your inbox. Welcome to the show, Jay.
Thank you for having me.
Great. Well, this wouldn't be Business with Beers if I didn't ask you, and we were in Hawaii right now having a drink at a bar. What would you be drinking?
I'll be getting some Casamigos tequila, añejo on ice, and with a couple limes.
Okay. Yeah, that sounds perfect. Awesome. Yeah. So if you could, tell us your story, who you are, what you do, where you live, and go from there.
Yeah. So my name is Jay Bourgana. I grew up in Morocco. When I was younger, I grew up in a family that's super poor. So I wanted to find an opportunity for myself and learn a little bit about money. I didn't know anyone around me that knew anything about money. So as soon as I could get a job, I went and worked for a French bank. And I started from the bottom at age 17, worked on the retail side and then went to the business side. I learned a lot about, I was at a branch that was in a commercial district. So we had a lot of small businesses. So I got to see essentially the retail crowd, but also the small business and, space and who makes money, who has cash flow, who doesn't have cash flow, who's always looking for credit and try to raise money. I spent a couple of years in Europe doing the same thing for the same bank. And so I saw how similar regardless of what the country is, similar the ecosystem of small business was, and it was very interesting for me. It was really good education. I came to the United States around 2002. Started working for. I wanted to go to the other side. I wanted to be in the business as opposed to staying in the banking world. And I worked for a manufacturer that did gifts, home decor products, food products. For the retail, for Walmart, Targets, Sears, Bed Bath & Beyond. And I spent about 5 years with them, 2 years in the United States doing supply chain management. And then I went to China for 3 years, did, manufacturing management and sourcing, and traveled all over China. And I saw what I kind of saw it closely, what big operations look like, and all the challenges around supply chain, all the challenges around manufacturing people. And one of the things that kind of came to me was the fact that all businesses are formed by people, and people behave the same way, whether you are in Morocco, France, Belgium, or in Qingdao, China. So or in California, it's all the same. And so the concepts are the same. The principles of leadership and management are the same. And 2007, 2008 hit. So a lot of our clients that bought, housewares and gifts and stuff stopped buying them and actually stopped paying us. So that business went out of that business, kind of shut down very quickly because, our biggest clients stopped paying us and we could pay our vendors. So 3 months later, I was selling the racks in the warehouse. This is a $500 million business that's been around for about 25 years. So shut down within like 3 months. So that talks to you about like leverage, taught me a lot about leverage, about a reliance on lines of credits and stuff, because Bank of America can come and shut you down in a second, take away that, $20 million line of credit, and you can't make payroll. And so I moved from being in the manufacturing, in the operations side, to being more from the consulting aspect. So I did a lot of the operational turnarounds for about 5 years. So I was just traveling from state to state, country to country, and doing operational turnarounds for manufacturers, distribution companies, growers, meat packers, you name it. It doesn't matter what it was. My goal was to go in for 6 months and turn around that operation from losing money to being profitable. And I enjoyed that process a lot because I got to learn about a lot of industries, and it kind of reinforced my principles and my theory around business. And so around 2011, I kind of got burned out, And so I said I'm going to take a year because I was just doing traveling 100% of the time for 5 years, living in hotels and middle of nowhere. And then it came back to California around the time kind of real estate started to stabilize, but still was cheap. So I started buying properties around Long Beach, California. Condos were selling 3 blocks from the beach. We're selling about $50,000 a pop. So I bought a few. I fixed them up. I saw value grow. And I got curious about real estate. I mistakenly thought that learning more about real estate, I should get my license to be an agent. And it was a big mistake. And but I did that, and I built a business. We went from 0 to $150 million in sales within 4 years, and built a really great team, a wonderful team, a good bench of leaders. And we were approached by a $6 billion local independent company, which acquired us. So we didn't exit about 5 years after getting into real estate, and start building other companies, start building other verticals.
When was that? When did you exit?
That was about 2.5 years ago, so almost 3 years ago. Yeah, and then went into I'm staying on board still. I'm in probably the last couple of months of my 3-year agreement with them, and it just got into essentially I get the bug of acquisition. I've never sold a business myself. I've been part of the exits, and so essentially it gave me a kind of a sense of all the things that I've done in the past to build the business the right way are what were actually the right decisions, and that's what made the business attractive to acquirers, and what made it desirable for them. So I'm trying to kind of teach those concepts to entrepreneurs, to businesses. And for me, my big why is more important, because I come from a place where we had 40% unemployment, where a lot of young people were essentially dying on the vine because of lack of opportunity. And I remember that vividly. I remember seeing people with, engineering degrees, with economics degrees that are just couldn't find a job, had to bribe someone to get a McDonald's job. And that all comes from lack of opportunity. And there's so many businesses out there that can create more opportunities, so many, entrepreneurs that can create more opportunities for a lot of people that are not doing so just because they have a blind side one way or the other. And to me, I'm kind of making it my mission essentially in life, and helping these businesses, close those blind spots and create opportunities for more people.
Wow, that's great and pretty powerful stuff. So let's start with, you said you work with companies to help them learn how to build their business so that they can exit it. So what are, can you give me an overview or kind of blueprint that you follow that, hey, these are the 3 or 4 most things that got to get set up in order to get acquired at a good multiple?
Absolutely, yeah. So let's start with essentially what makes the company desirable in terms of an exit, and what makes it get the highest multiple. Okay. It's when the business is about to be acquired, when you decide to buy a business, you're essentially buying cash flows. Yep. And the multiple, which is kind of the way we price companies, is going to be based on the quality of those cash flows. Are they essentially the certainty of those cash flows? So ideally we want stable, stable but growing cash flow, and that has the lowest risk. Meaning, if the owner leaves, does the cash flow say that those earnings stay the same?
Is the owner the number one sales guy? Right.
Exactly.
If that's the case, not going to get as good multiple as a team.
Is the team diversified, where you don't have bulk of your sales coming from one small area? Is your product diversified? Let's say you're not focused on one geography. You're diversified in your geography. You're diversified in your team. You have enough leadership. So even if you have a bench, you're not relying on one leader. You have multiple leaders that can step in and take on, new things. So essentially the quality of the earnings comes from the quality of the team, the quality of the source of the business. So all your business, is it coming from one place where it's shut down, then you're toast, or is it diversified? And then and essentially the geography of the business. Does it cover, the types of clients? Are you concentrated on, 1 or 2 clients? Are you concentrated on, or you have low concentration. So like all these components add up to that quality of earnings, and that creates certainty around those earnings, and that gets you the highest multiple for that company.
What are some of the ranges of multiples? Someone's listening to this, they've never sold or bought a business. What's, how many?
Yeah,
how many
you can
multiples?
go anywhere. Yeah, you can go anywhere from 1-time earnings to 12 times earnings. And it all depends on, again, the quality and the size. As you grow in size, when you're doing certain amount of earnings, your multiples grow, because, with size, you have more ability. You have an ability to create more certainty with building a bigger team. We have resources. Yeah, we have resources. Yeah.
So at what scale do you start to see? So in our business that I operate in, like 2 to 3 times is kind of the average that we're buying. But obviously, the more profit there is, like you said, the higher multiple. So at what range and from your experience, does it get to like a 5 or a 6? Like how much cash flow do they need to the owner, right? It's owner kind of benefit.
I think as soon as you hit that $1 million earnings in EBITDA, that's when you get to that 5, 6. I think it depends on the quality. So if you can get to that $1 million EBITDA, then you hit the 5. Once you get to the 10 million EBITDA, then you're hitting the 8, 9. And again, it all depends on the quality of those earnings. Certain industries have more demand,
and if it's like
demands.
A subscription based, it's probably going to do a little bit better versus like if it's a driving sales every single day, effort. I could see.
Yeah. So the more capital, so another component is capital intensity. So the more capital intensity, the higher the capital intensity, the lower the multiple is going to be, because as you grow, the more you have to bring in cash to keep up with that growth. So yeah, it's an interesting dynamic in terms of like, and then what you do to get there, what do you need to do to get there? And that's the beauty of it. And for me, I've always like felt it doesn't matter what the business is. When I walk into a company and I want to do kind of like an analysis, I want to create a process of how to turn it around. I start with the client, the consumer first. Okay, what does the client want? Like if I'm in manufacturing, or I go to the top 5 clients, and I'll essentially sit down with them and find out what their experience is like with this business, and find out what do they want ideally in their mind. If everything's perfect, what would they like to see in terms of offering? And then I go back to the team and start to create that. Even if we have to do it in a way that is not super automated and super efficient, we want to create that. And then once we create that, we deliver that to the client and find out what they tell us about it, and get their opinion on that. Once they're happy with whatever that product or service that we're delivering, then we go back and say, okay, let's create a process to deliver this in an efficient way. And then we sit down and we draw a flow chart for the process. Now we have the process, and then we sit down and figure out the job descriptions at each point of that process. And then we identify the type of people we want in that job description, personality-wise, skill-wise, and all that. And then we so now we have the process, we have the people, and then we put the technology on top to help the people execute on that process. And then once we do that, then we find supervision or accountability, a supervisor that's going to keep these people accountable to the KPI that we've set in place, that we agreed on. And then we identify, okay, what is the culture of this group? What's common? What is common among these people? What makes them all work together? How do they gel? And then kind of articulate that culture back to them, so it becomes something that we all know and we agree that's our culture. And then find a leader essentially that's going to keep it all together, that understands the demand from the consumer or the client, understands the process, understands the technology, understands the culture. And then once we have that, then we go back and say, hey, can we speed up this thing? Can we double the speed of this operation? And then things break. And when things break, then we start fixing those things. And then we kind of keep going in that loop until we have like the perfect, the perfect flow of operation. At some point, you produce more than you can handle, then you have to go back and sell more. Then you have to go and get more salespeople to go sell more stuff.
So can you give an example of maybe a client you worked with where this is Like you went to a client, what was the customer need? And can you give me an example of something that you had to change or fulfill?
Yeah. So I used to work with a company that did packaging. So these plastic crates and plastic containers for it was essentially a replacement for cardboard for retailers.
Mm-hmm.
So they have clients like Walmart, Target that use these for their produce, section. So instead of having a cardboard box in the produce section, they'll have these beautiful plastic crates.
Yeah. Okay.
Yeah, exactly. Yeah. So we used to actually work with a company that used to lease those, and they will make money at each turn. So they'll have, they'll deliver the crate to the producer, to the farmer. The farmer sends it to the distribution center, goes to the retail, once it's emptied, because collapsed, goes back to the distribution center, comes back to the company, washed, fixed, and then goes back out. And so their model is about increasing the amount of turns, for those crates. And they had millions and millions of them. Each of them were tracked by a barcode. And so they travel across the country. And so when you walk into an operation like that, it's a big facility, 200, 300 square foot facility with probably about 600 people and big machines. Mm-hmm. And your goal is to identify, okay, what is going on? Like very quickly, you could tell, if everybody's focused and everybody's working, or there's some people that are hanging out, people that are not, focused, people that are, which departments there's more buzz and which departments are slow. And so for me, I just sit there. I stand in front of the door at 2 a.m. and I talk to every person that walks in. I just want to get the feel from the people. And I'll just segment it: one group A and group B. Group A are the people that I'm going to keep right away, and then group B are people I'm going to send home, and I'm going to bring new people. And so I'll just keep rotating. Like for a week, I keep rotating the team until the group, everybody understands that we're looking for, efficiency, good people that are focused, hardworking, they want to be here, they know why they're here, they understand what we're trying to achieve. And then once we figure that out, then we go back into the process and find out what they're doing and why is it, how can we do it better? And same thing, we're going back to the client, finding out what the issues are. Hey, I'm getting broken stuff, I'm getting stuff that's not clean, I'm getting stuff late, I'm not getting the sizes that I want. All the things that they come back to us with, we come back with a list of things that the client wants, and we come back and then we essentially start working on that process.
Okay. Great. One of the things you mentioned was how all over the world, a lot of the small businesses are the same, different languages, different cultures, but at the end of the day, there's a lot of similarities. From your experience, what are some of the challenges, the most common challenges that you see across the board that small businesses face?
One of the biggest things, and that's one of the, like in the real estate, in small businesses don't, sometimes they start small. They start as an individual who's a self-employed person, mm-hmm. who just got lucky and got a business, all of a sudden grew and got this big business. So one of the issues that I found with small businesses that grew into medium-sized businesses, or self-employed people that grow into small businesses, is that they keep thinking of the business as a source for income for them. And what they essentially do, they miss the opportunity to build a bench of leaders. And that's going to allow them to grow that business to the next stage, because the leaders are going to be the foundation of that growth. If you grow too fast and you don't have foundation, it will collapse. That growth can kill you. And you see a lot of business owners will tell you, hey, I've tried growing and I couldn't find enough good people, mm-hmm. or, yep. It was too much for me and I was too much stress. And it's all based on them not developing the skill themselves. The leadership skills are also the skills to identify good leaders within their teams and coach them and train them, and also give them the opportunity to make their own mistakes and then learn and develop into, great leaders that are going to be the foundation of the business in the future. And I think that's the number one thing. Like, you used to hear back in the day, these GM and Ford and, GE, these big companies back in the day, they used to have leadership programs. Yep. And they used to have their own universities that will churn and produce leaders. And today, you don't see that. Even in big companies, you don't see that. It's like, okay, where are the leaders coming from? You can't handle growth by just trying to pick people from the outside. It just doesn't work. You need people that are going to be developed from within, understand the culture, understand the client base, understand the product, understand what we do, and be able to grow and develop and be able to help us grow moving forward.
Do you have any ideas of resources where a small business owner wants to develop a guy, wants to teach him leadership skills? Any guides to follow, books to read, anything of like to help kind of just speed up that? Because if
absolutely. And I mean, there are a lot of books about leaderships, from anything from Maxwell is great, anything from Jim Collins is great. A lot of really good leadership management books out there, but I think it's more from a mindset thing. It's a mindset that, hey, it's almost like, you're investing in your business the same way you invest in leads, or invest in software, or you invest in a new office. You want to invest in your leadership bench, and you're going to have to pay some people. You're going to have to create opportunity for them. You're going to have to take less margin and share some of that revenue, some of the earnings with, a couple of people that you see potential in for the next, 5 to 10 years. You have to create a vision, not only for yourself, but for the whole organization that is bigger than everybody else. The people within the organization have to see that there's a big vision that they can grow within, where it's not just about you, the business owner, and you making your revenue, you're making your income and living your lifestyle. So you have to shift the idea from a lifestyle business and come from contribution. I'm building something that's going to grow for everybody, not just for myself.
Yep.
And have to live, because it's tough. Because when you're in a tough market, you're in a tight margins, and you have to even do more to build this bench. It's a tough decision, sacrifice to make to build this bench. But if you do it, it's really rewarding. It's a big leverage, and it compounds exponentially in the future if you can do it the right way.
Yep. Have you read the book Vivid Vision by Cameron Herold?
I've heard of the book. No, I have not read it.
Yeah, you should check it out. It's basically what you're describing, where put pen, on paper in terms of what's like the 3-year vision for your company. What's your relationship with your suppliers? What's your culture look like? And the idea is that, not only do you write it down, but then you share it with your team and you get their feedback. And everybody then gets excited because you're all working towards the same path. And then when you're making decisions, it's like, are these decisions that we're making today, do they align with creating this vision that we're all working towards? So
exactly.
You should check it out. It's a great book.
It has to be a big why that's not about yourself as a business owner. It has to be about the people. It has to be about the client. It has to be about the customer. It will benefit you as an individual in the long run, but it cannot be about you, because if it's about you, you're going to try to maximize the short term. And you're going to maximize, you're going to pull as much cash out, invest in gold. I see people, taking money out of their business to invest in another asset when their business can return more and their people can return more.
Yep. They're buying crypto instead of expanding their business. And
invest in that person that's right in front of you. That person is going to be, it's a huge asset to you and to your business. And if you can invest in that person, money, time, and attention, you're gonna reap so many rewards long term.
Yep. And it's kind of like this stair step approach where you have this increase in your payroll because you're bringing on these people, right? High quality person.
Yes.
And you don't see immediate reward, but then you're able to then take on so much more. And so then that's where the stair tread kind of comes into play. And but you got to see that and you got to believe it. And sometimes, like you said, someone may make a bad hire. He wasn't the right guy. So they think, this doesn't work. But really, it's just that person. It's the model works. And
Peter Drucker talks about has the reason for a business to exist is to create customers and to keep them. And I think I don't think of myself as even close to Peter Drucker, but I think that the reason for a business to exist is to create talent and to keep it. And if you can make that your mission as a business owner, going from the concept of prospecting for clients, marketing for clients, doing everything you can to make the client happy, to the other way where you're prospecting for talent, marketing for talent, and doing everything to keep the talent within your ecosystem. The more talent you have, the more growth you're going to have and the more potential you have in the future. So you don't have to go get the expensive MBA or whatever, or someone with a lot of experience. You just have to spend the time to develop the skills to identify that talent, and that takes time. It's like anything else. Building a skill for sales is the same thing. You have to get a lot of no's. You have to mess up a lot. You have to take on the clients that you don't want to take on, but eventually you're going to learn. Same thing. I spent one of the things that benefited me was I was in the manufacturing environment where we used to hire a lot of people all the time. Mm-hmm. And so I'm used to running multiple campaigns with like multiple agencies. So I would go essentially and read 500 resumes a day, and it was like a normal day for me. And I kind of developed a joy for it. Like I enjoy it essentially, and I can go through it very quickly. I can scan and create essentially I developed a pattern recognition of what the kind of like the resumes are going to work out very well. And then, from a quick phone call, a 3-minute phone call, I can get real quick if I want to meet this person for the next stage. And then a face-to-face will allow me to identify if it's a good fit or not. But that's a huge skill for entrepreneurs to pick up.
Yep. Yeah. With a phone call, and I've gone through a lot itself. It's like, are they excited to talk to you? Does the tone of their voice raise up, or are they like sound like they just rolled out of bed and continue to sound like they just rolled out of bed? And,
And we look for curiosity. To me, when I interview people, I'm always looking for how curious they were about the last job they did and how aware they were about what they did in the past. Because if they were not excited, for me, you can get excited about sweeping floors. You can get really good at, painting, and get really like, very detailed about how to, what kind of color, what kind of paint, what kind of this. So I like to find that sparkle in people about whatever they did in the past and why they did it and how did it fit within, the vision of the business and what was it about. If they're not curious about it, if you're not curious about the product they were selling or the company they were working at, they were making, I know they're not going to be excited about my stuff. So that curiosity is what allows me to develop, because I can teach, and if they're curious, they're going to grow fast with me. Yeah,
that's great. One of my last questions here for you is, successful people have a commitment to executing good habits on a daily basis. What 2 to 3 habits that you have that you've kind of attributed to the success that you've created in your life?
I think like reading a lot. I'm doing a lot more meditation, staying healthy, like doing the miracle morning routine. I used to, that's something that I've always had, and it just Hal Elrod just codified it. And so having a really good routine, a morning routine is very powerful. And then just consuming a lot of content. I'm a curious person by nature, so I inhale content like in very diverse, very diverse content consumption, and so I enjoy that because I can pick ideas from one industry in one place and I can implement them in my businesses.
Yeah, that's great. Speaking of reading, what's one book you'd recommend that listeners check out?
Meditations by Marcus Aurelius. Okay. Highly recommend it. You can listen to it on Audible. I listen to it twice a year. There's someone who talks about like how new people have the amateurs need to focus on skills, intermediate people need to focus on strategy, advanced people need to focus on professionals, or advanced people need to focus on mindset. And I think Marcus Aurelius, even back in the day, had certain humility about him at his level to be able to share his thoughts, his intimate thoughts with us. And I found that book is just fascinating.
That's awesome. Yeah, I'll have to check it out. And where can listeners connect with you if they'd like to learn more?
Yeah, I'm on social media. I'm on all the platforms. Jay Bourgana, it's easy to find. My last name is very unique, so I'm easy to be found. And I'd love to connect if you have a business that you need help with. We help businesses through consulting. We help business through masterminding. We have businesses through acquisition and turnarounds. I'm just happy to create opportunity for a lot of people. There are a lot of good businesses that should be growing and should be thriving. And that's what my mission in life is, to help them do that.
That's great. Well, I appreciate you coming on today and sharing all your wisdom. And I think you delivered a ton of great value. So thank you.
Awesome. Thank you. Thank you, Brian.
Bye.
Have a good one. Bye.